All right, let's jump into things. Where are we at? 14 past 10 on the 6th of May. So look, I'll start off with obviously a little bit of data, and that just from overnight, just because we had the ISM service numbers out, and you know US data for so long has really been quite rubbish. And you've seen this obviously sort of show in the chart. It's just been sold off across the board. Like, I mean, it basically, like, there's a whole sort of range of sort of things that have been driving US dollar down. Obviously, the sort of tariff stuff is a big sort of driver of it all. Just the uncertainty. But basically, if you sort of boil it down, it's a lack of confidence in everything that's sort of going on over there, and the unsurety of sort of where it may be. Hence why we've seen gold going up, these kind of bits and pieces, and the data has been there to support. Like one of these sort of many things that have been driving down is just weak economic data as well, and the continued weak economic data has just sort of really kept that pressure on DXY. But when we get these little bits of data out overnight, so we had the ISM service numbers, um, excuse me, this sort of beat, they not only were expecting a slight little slowdown, again, it's one of these ones with a benchmark of 50, so above 50 expansion, below 50 contraction, sort of, they were expecting a sort of little bit of a slowdown. Not only did they not get the slowdown, but they actually sort of beat it quite substantially, well, yeah, quite substantially in the other direction as well. Um, so the market sort of jumped on this. It sort of thought about it for a little bit, but ultimately, yeah, sort of you saw the buyers really start to sort of step in after that initial sort of back and forth with DXY and that. And we've just actually sort of opened up this morning, and they've just come straight out of the gates with it, buying it up there again as well. So yeah, we've got FOMC on Thursday morning local time. So that's really sort of the main thing that we're sort of looking forward to sort of see if we're going to sort of see this sort of continued USD rally. I think we are. Look, I've been a bit of a sort of a backer of the US dollar for last week or so. Obviously, sort of been let down quite a few times with it. But this is the thing with the DXY turning around. It's like a battle cruiser. It can't turn on a dime. It takes forever. We see this at the top of the trends, and it's exactly the same at the bottom of the trends. And this is what makes me think. As I said, I'll get to the charts in a moment. But that once we start getting going and it starts being bought up, that maybe it may sort of see a little bit of a run. And this run sort of could continue because I know a lot of people are sort of thinking, well, I've seen sort of calls for like, mid 90s and that, and a lot of people have been calling 101, 102, and so myself included. But I think that this thing could, should it sort of break out, could sort of continue and possibly all the way sort of through summer. And of course, when we say summer, we mean European summer. Beautiful sort of time of the year over there, but obviously a little bit quieter for markets. Anyway, that's through Asia today. Not a great deal. We've got building approvals for Australia. I covered this over the weekend. It's quite a substantial drop off, and like we've got housing issue. I know everyone's got a housing issue, but we've got a housing issue. And you'd think you want to sort of get the building approvals up to sort of try and expedite it, but no, doesn't seem to be, and it's a fairly significant little sort of drop off there as well. So it'll be interesting to see how that sort of comes through. Caxton service PMI, so this is a little bit of sort of China data as well. Same sort of thing as we saw with the US data, and that sort of above 50 is the expansion. So yuan has been absolutely ripping in terms of strength. So last couple of days, like as in trading days, China's been on holiday. They're back today. Japan, I think, is on holiday again. I think maybe even for most of the week. I'm not quite sure. It's definitely no 2 days. So Japan's definitely on. Not Japan definitely, but Japan's on the bank holiday here. So it's funny. I'm looking at a completely different screen. It's right in front of me. Um, Japan's on bank holiday here. We also had UK closed yesterday, so this is for May Day. I think there was a bunch of sort of other sort of parts of Asia in that were closed yesterday. So really, yesterday's price action was quite crazy, and there was a little bit of stuff going on with, not that I sort of even brush on it on here, but with the Taiwanese dollar, is that what they use over there? Taiwanese currency. but that incredibly strengthened up yesterday, and you saw that sort of follow suit with a lot of those sort of Asian countries, Asian currencies against the US dollar. So that was pretty crazy in that. And obviously sort of this is what I'll say, sort of like when you've got these sort of bank holidays and things as well, you've got the ability for these markets to really explode out. It's not just like, okay, nobody's there, okay, so it's going to be quiet. That can definitely be an outcome. But at the same time, it can also be that nobody's there to sort of stand in front of the way of the trades, and they kind of let them sort of play out and run a little bit. So, yeah, that's great. So it'll be interesting to see if we see a little bit of a revision of those moves yesterday. Um, that's about it for Asia. Sort of end of Asia, we go sort of like, well, it's, Asia slash Euro, start of Euro, and that you got a bit of sort of yeah, European currency data and that sort of coming out. Again, PMIs, all the stuff's looking a little bit quiet, sort of like, so you got for the euro, you got sort of over there in UK, we've got the French, Italian. The Italian looks like they're not, that's not going to be a big mover by any means. The French data sometimes does move. German can have a bit more of an impact because, Germany's quite a strong economy, making up sort of the Eurozone. So German data can move things a little bit. French, not so much. Italian, though, I would say. Apparently, Spain's been doing really well as well. And then you can see it in the data here as well. If you can see, sort of 53.9. Again, though, a little bit of a slowdown expected. Slowdown expected. Flat, 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 sort of all across the rest of the board, but all sub 50 here as well. So Italy and Spain actually sort of looking like they're actually doing something right at the moment. But again, the expectation is the slowdown. So we'll see how that sort of plays out with it all. But again, look, these aren't massive market moving bits of data, particularly with FOMC coming up. But it does sort of lead into the idea if they're more struggling over there, and again, sort of like, Germany's the sort of big one, and the Euro sort of final services here. If those numbers are a little bit weaker, well, it stands to reason that it would weaken the euro a little bit, which again leads into the sort of the play out of DXY breaking out a little bit more because the euro makes up so much of DXY, I think about 60% or so. Moving forward, we've got sort of Canada, boring, US. So again, look, wow, look at the number difference between these two with the trade balances. Um, so we're looking a little bit of a slowdown here and a larger slowdown for the US over there. I guess that's about on par with everything going on with the tariff sort of stuff. And that's about it in terms of sort of data moving through. You've got 10-year bond auction. I've got to start sort of recording these numbers down because I do see them saying, oh, we've got the bids up for the bonds at 3 years, 5 years, 10 years, whatever. And I'm like, well, I don't know, like it's 4 billion or 400 million or whatever. Is that good? I'm not quite sure. So I'll have to sort of pay attention to that to sort of see because the bonds over in the US, everybody knows, is really sort of weak in that. And that's the thing that, as I said, US dollars. So the bonds will work inversely to the yields because obviously a higher yield is more enticing to buy a bond. If you're going to get a better return on it, well, that's fine. Yeah, you buy it. And then obviously the inverse of that, when everybody wants to buy the bonds, they don't need to offer so much. So that's why you have the inverse relationship with the yields. But even though yields have been going up, people still haven't been buying bonds. So bonds are being sold off. Equity markets had been sold off, and US dollar sold off. And this leads back to my initial sort of uh, comment when we were sort of talking about the sort of the data overnight that it's a lack of confidence in the US. So it's not your normal sort of situation where, okay, I sell my stocks, I buy US, I go to cash kind of thing and buy US dollar. So, stocks go down, US dollar goes up. No, they sold that and then they looked and they took the money offshore and went to euro or they went to gold and these other sort of assets with it all. So, any sort of and this is why this number is important, not specifically just itself in that, but the idea that you actually may have somewhat positive data um, coming out of the US could be something to sort of definitely keep an eye on. All right, so that's the data going here. Have a look at DXY. DXY's just opened up and boomed here. So we've actually Look, I drew this out last night, so a couple of little things to sort of as little takeaways. I know it's a very messy sort of chart here, but what we can sort of take away from this is that obviously this is a nice little support line. We touched down into it, which is also the 61% retracement of the move that we saw a week or so ago, where they were buying it up very hard. So look, it came down, tested 61. We had that little sort of stuff around on Friday. So this was Friday's move where they actually had, again, they had some positive data, but they sold it down. It was very odd. It was NFP, and the numbers came in a lot stronger, and then the market bought it right back up afterwards into the close. And so the idea was maybe we see a little bit of a flow on from here, but no, they ran it down again. And this could possibly be, as I said, this is obviously DXY, and it's made up of a select amount of sort of currencies. But the fact that other currencies are getting affected or touching and doing things doesn't then permeate across to these currencies that DXY actually measures US dollar against. So, you may be seeing US dollar being dumped against a bunch of currencies that aren't part of DXY, but if people are seeing that as well, they obviously pile in and start dumping down US dollar in that as well. And that's what we saw through yesterday. It sold down, 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 back, retested this level. So this is somewhere where we can grab this little buyers thing. We can say we know they're here, and we can see again, they're showing up here. So this is obviously an area where if the market gets a chance, they're going to buy it. They're going to buy it, and they have twice in that. So now it puts the onus back on the sellers that are at this level here, which we saw capped it on Friday night, capped it yesterday morning, and it's opened up very strong. So this is on a 4 hour. If you look at this on a short time frame, this is the open here, and it's just gone bang straight up. They're not worrying about this at all. So look, we're coming up into a little sort of resistance area. That's fine. Was this at 100, 106? The crucial one, obviously, is this big one here. This is what sort of put the cap on it the other week, or last week, or whatever. We've seen this has been sort of brutal sort of sell downs here each time. I've been calling this 100.4, 140 level since we were back over here as the crucial level that I've been looking at. Hence why the alert there. I think what we're going to start to see above here is a bit of sweating, a bit of panic. That panic's necessarily the right word, but I think you may sort of find a couple of stops just up over here. So, as we can see, this is a very sort of wonky looking inverted head and shoulders. I think on the larger one we still had it drawn out. Very wonky on the right shoulder here, but the thing with inverted head and shoulders, and head and shoulders either direction, and that is very rarely are they nice picture perfect sort of things, but the idea is still the same. And the idea here is that, you've got the buyers down here, they've pushed up here, they've pushed up here. And this is the thing, and this is why sort of like, it works, this works with like Elliott waves and all this kind of stuff as well, that you got your bigger trend and then you've got your little trends inside it. So we can see the buyers on a smaller scale doing these moves like this. But what we really want to see, the buyers were taking it at 98. They said, hey, look, you know what? I'll buy it at 99. I'll buy it at 99.5. So you want to see the pressure between these two. So because we know that the sellers are sitting here, hence the arrow sitting over here. So we know that the sellers are sitting here. This is going to become our little lines that we're looking for. Update this and move it across a bit. What we want to see now is really a break between this area, because we can see the buyers are moving to here. They're moving to here. Are they going to keep and crush up and push up and sort of take the demand and push it out the top side here? Because again, look, we know that the sellers are sitting here. We've seen them had a pretty good time. Sold it here, had a pretty good time. Last week, sold it here, had okay time. Not as good a return as some of these ones. But you can see that now the battle is between, buyers moving up. Can they push it to the side here? Or are sellers going to be able to sort of maintain and hold this level should it get down into it? Obviously, we're sort of coming back in to test yesterday's and Friday's highs. Friday's close highs. It's also where we sort of opened yesterday. So it really was just a one-way trade yesterday. But in the grand scheme of things, if you look at this at a weekly, this whole little move here yesterday, because it was just yesterday and now we're coming up here, should this push up here and take out this, this is flipping the weekly. Well, actually, technically it has flipped the weekly, but we're just going to put it above the resistance. We'll call that one flipping the weekly. And it just sort of makes that wholesale down from yesterday, actually just a, that wholesale down from yesterday, just a bottom wick, potentially for a weekly candle to move up. And if we jump onto, I think this one might be a bit clearer. This is the weekly as we see it now. This is like a big sort of swing like round here. You can see sort of like, you know, wicks, 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 and it's really turning, turning, turning. And this is why it's crucial. Again, this is the 140. You can see on the right over here, the levels. 140 is that area where we've taken out all these wicks and we could accelerate and we could move this thing back up. And that's what I'm saying. Like, yeah, the thing is, there's a lot of sort of stuff to come in here. Like, so we've got this falling resistance. That could sort of slam things. I mean, that's only at 101, so it's not very far away. But should you get a break here and then maybe a pop up here, maybe something more to this kind of effect now, which could sort of see us have a little bit of a breakout, back test, and then a move forward. Look, Elliott Wade's not my shtick, but you know, this is just sort of mainly what I'm trying to show here is this weekly. This could be a bottom wick that we've just seen through Monday, that sell down yesterday. Should this flip and push up here, it would stand to reason that you probably see a fairly decent sized candle on top of this. The RSI on a weekly, massively oversold and sort of like, you know, it's starting to open up. Doesn't mean that it can't continue here because as I covered on the weekend, you know, this thing's been oversold technically since it was 107 or something. Yeah, 107. So, you know, it can stay oversold for a long time, but it just goes to show that sort of, should it flip, should it start to move, this thing could effectively, oops, take a while and move up before it does something like this. And if we do see the RSI continue to move the whole way through here, it's not going to happen with it going like this, in my opinion. I think more likely for this to sort of continue through here, you're going to have something that could potentially push a lot higher and then maybe push back down. That's just a random area. I didn't pick that off anything. I suppose it'd be the sports under here. But the point is, it's just emphasizing the point that should this RSI sort of start to push up, should we see a breakout of these channels and see these things happen, it takes so much to turn these things around, as we've seen sort of like, you know, it's 1, 2, 3, 4, 5, 6, 7 weeks to turn this around here. Yeah, it closed, it moved a bit on a dime here, I suppose, and a little bit here as well. So maybe this bucks my trend a little, bucks my idea a little bit, but more often than not, a couple of weeks, bang, turns around. A couple of weeks, bang, turns around. Look at the top side. A couple of weeks, then starts to move down. A couple of weeks, moves down. Like, you know, so it can certainly hold its trend if it should start to sort of push along there. That's just something to keep in mind for a future sort of more medium term kind of thing. If we look at the sort of here and now, what are we looking for? Well, get back down to the lower time frame. I would say above this area here. Again, this is like a little internal structure. We can see, let's get rid of this because it pretty much shows 78% pullback from that. That's another thing as well. It's actually a couple of thoughts all in one there. DXY is not shy of very deep sort of pullbacks before then sort of moving up. So, you know, these are things, particularly bottoms of trends, it can do these 78% pullbacks and it doesn't actually affect the whole sort of thing so much. We do have potentially a little bit of a channel lining up here as well. So should this thing move forward, we can carry this up a little bit. Not fully confirmed, but as you can see, you know, this could be a pretty decent little channel. Should this thing sort of continue, could give us a little bit of a bounce high up over to these areas over here. But look, anyway, that's in the medium term. Let's get this out just to clear it up a bit. You can see sellers were here, they've stepped in here again. So what you want to see is this to continue and push through here. If you push through this sort of, you know, 100 level, we're looking back up for the bigger tests, which is really, the 100.2 to 100.3. 100.4 is just a clear of that area. And I imagine you probably get a couple of little people sort of jump up and down, and that sort of should you sort of get a move up here. So I imagine if we do get up to this area, we'll start to see a bit more of an accelerated move up to the top side here. But first things first, you just got to get above this 104. That's top side. Considering all things is obviously if we break this swing low, we come back and test 99.4. This is really the area it's got to hold. If it doesn't hold here, yeah, you come back down and test the buys down over here. But that larger structure is getting a little bit damaged then. It's okay to have these internal smaller structures. As you can see, buys move up, buys moved up, smashed. Buys moved up, smashed. It doesn't affect it so much when you, for the bigger picture, but once you get this larger structure where the buys are down here, buys down here, buys down here with multiple tests of the levels, once that gets disrupted, I think that'll be the time that we sort of break up. So you just want to see a continued move up with the buyers, and you want to see these buyers push it up, not necessarily around here, but in that kind of sweeping move up to the top side here. So first things first, above 100 and 100.1, I think that's it, yeah, 100.1, and then we could sort of potentially see that flip that weekly. Well, it's already kind of flipped it, but flip that weekly a bit more, and then tackle this 103 level. That'll be the major sort of breakout in the short term. All right, pop along. We've got gold. So gold flew yesterday. I was obviously, and I kind of still am looking down at this sort of level over here, but obviously you gotta respect these things when they do move like this, because I think it was almost like about $100 move yesterday, which again is just insane. But maybe this is the norm with these sort of things. So there was Saturday, Monday. So here, yeah, $97, give or take, $100 or so. It kind of moved. Yeah, 90, call it 97, whatever. $97, and closed near the highs. So yeah, that was amazing move, really. And you can see that this is the importance of this level here. So this was the structure I was looking for. Obviously, strong supports, broke down here, looking for the retest, and then the drive down here. This is what I sort of talk about when I talk about structure every day. We had our move down, we tested the lows, broke down. That's fine. Found support, moved up, found resistance at a previous support area. This is the crucial leg, because this is the one that gives you your continuation for a lower low. The whole thing resets, you do again. Find support, resistance, blah, 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 and you reset the move. The other alternatives are double bottom, which could lead more to a sort of bit more of a range potentially, or a breakout. Or what we see here is this push up of buyers, and they actually sort of came up here with a higher low. So this was the indicator here, this little move here, the fact that the sellers weren't able to at least test those lows. The fact that they sort of moved up and the buyers said, oh, look, you know what, I got it for 32. I'm going to pay 32.20. Why are you going to pay 32.20? Because it's going to 33.30. So, you could see the progression, like the sort of the pressure build and push up to the top. And that's why, if we clear this up a little bit, you can see how important it was to get back into this range for the buyers there. They sort of like, as soon as it kind of sort of stuffed around this area here a little bit, because we knew sellers were sitting here, we knew sellers were sitting here, we knew this is a crucial kind of support area. But once it broke above that, a lot of people going short would have just been like, okay, bang. And as you can see, it flew back up to the top over here. So look, as it is coming down here, try to sort of find some little levels here to sort of say, okay, this could be where it is. Broke out of this, broke out of that. I think what you need to do along with these things here is really just sort of take this with the highs. So what we're sort of saying is, okay, you got highs, lower high, lower high. It's taken out these ones, but it still needs to get above 33.80 to be okay. Boom, back into full bull mode. At the moment, it's just sitting there. I think if we do see that breakout on US dollar, I think it's going to make it hard for gold to do it. So there is a thing sort of like, it's not that by no means overall is it a bear market. No, we're not saying that. But in this terms of this structure, the fact that it broke down here again, you need to respect both sides of it all. This does show that sort of like there are some sellers happy to sort of take these things around here. And when you do have these sell downs, you know, when you are sort of moving in more of this sort of structure here, and as you can see, here's your highs, there's your lows, whatever. Um, it is moving in this direction. Some of these rallies can be some of the most violent rallies you'll see. So, you know, doesn't mean that necessarily we're going above here, above 33.80. Okay, here's your pullback, and maybe we're moving higher. Cool, that's great. We'll see how we go. But the point is that, you know, even if this thing is moving down, you are going to see these periods where it just absolutely jams up incredibly hard. So the big test with this one here is to see, do they carry this? Do they make it a little bit higher? As I said, 33.80 is where you got to say, okay, look, you know what, that may have just been the pullback, and this is a little trap out and up over here. But I'm not completely sold. So if we get back underneath this little wick down here, because it started to make itself a little support here, so let's put it under here. So under 33.03, or call it 33, I suppose, just to be, you know, round number and all. Underneath 3,300, I could see this thing sort of just really undoing the move. Come back down here. This will be the area that you want to see what happens with the market. Oops, I can grab this thing without, no, whatever. This is kind of level that you want to see, because this is where obviously buyers were holding it. Support, support, support. And then obviously it was a resistance. It was the area that triggered this move up to the top here. So underneath 33, looking at 32.60 to sort of see, can the buyers step back in here? Because you can see they're happy to be buyers, happy to be sellers. This is the area that flipped it. Underneath this wick here, I would say this is just a little bit run out of steam. It's overbought. This is on the 4 hour. Underneath 3,300, aiming at 32.60 to see what happens, to see if the buyers are going to step back in again. I would say you get a little reaction there, if anything, but certainly if you break below that, I think that's when you're coming down to your main targets here. And this is really just a flare up, hit some stops, drag in some more longs, add some more liquidity, and then ram it down. Because again, with all these sort of things, look, this could still go up over here. I'm not saying it won't, but the thing is, if you are ultimately going to sort of sell it down to you know, this point over here, whatever, you know, you can either sell it from here to here, or you sell it from here to here. It's obviously a lot more beneficial to do this. You drag in some more, get some more liquidity, and then bang, and that move there is obviously a lot more profitable than just continuing to smash it down here. And it's almost sort of like, you know, I mean, everything's beautiful in hindsight, but it's almost sort of like a little bit too perfect, isn't it? Support, support, retest, bang, and then go down here. I certainly, like, I was thinking, yep, here we go. I've called a lot to sort of say down in this big confluence through here, previous highs, top of the channels, 61%, like all this sort of stuff, 38% of the whole year's run. It sounds almost too perfect to just come straight down over here. A lot of people, I mean, I'm not the only person that's seen this, a lot of people will see it. So where's the pain trade? Okay, rip it up here, smash all those people, then take it down here. So if that is the case of what they're trying to do, underneath 3,300, we'll definitely put the alerts up for it. Underneath 32.60 means it's definitely going to start to sort of tackle these lows. I don't think these lows are going to hold if 32.60 goes. So, see how these alerts go. All right, flip along. We've got Aussie. Aussie, God, like it's hard with Aussie because you're kind of sort of thinking like your consolidation. Yep, broke out to the top side, but hasn't been a sort of super convincing breakout here. Certainly not with this morning with that US dollar little pushing up here. It's back down to basically the top side of this range, the high side of it all. I think it's got a nice little ledge here. I think sort of really underneath 37, we got the wick lows of wherever that news came out. But this was what I was looking at, obviously, yesterday. It's a little, if you get onto the lower time frame, you'll be able to see a bit more of a sort of coming to a point, to a wedge up into the top side here. And it didn't really convince me that it's because this is where this Friday's highs exploded up and went up, sell straight in, up, sell straight in, up, and then just, yeah, dribble, dribble, dribble. Coming back down here, testing these buys at this level here that we sort of saw this ended Friday's session. Buyers here, yada yada. So where are the buyers going to be? They're going to be here. This is why this support is going to be important, because if they don't hold this, you kind of got almost a bit of a failed breakout. And, you know, you want to see, if you're sort of looking long on Aussie, that the buyers are sort of still happy to maintain here, because if you're happy to buy it here, it's because you believe it's going up over here. If you're not going to buy it here, i.e. the price is allowed to sort of move through, we've got a lack of buyers here, I would be almost sort of looking at something like this. I think an important area, I'll just put a little mark on it as well, will be this 6412 area, which was the wick low from NFP. NFP low. Now, it's not a sort of super support or something, but it was that last little shakedown before bang, and then moved up and ripped over there. So I think sort of underneath 35, you're looking at sort of 6412. Underneath 6412, that's almost like a failed breakout. You know what I mean? Like we had this sort of structure here. Here it goes, bang, it's up here. It's an incredible day yesterday. And look, it's still in that breakout backtest kind of area. This is provided that this 6440 level holds. If this holds, this is a back test, and then you're really looking at the highs. Just drag one of these. You're looking at this level here for your breakout. So let's get this a little bit more reasonable. That's where you need to get, obviously, a new high with it all. Because this, look, at the moment, it is a little bit of breakout, back test. You need to have this leg at some stage. The thing with Aussie is sometimes you can say structurally it should do this, and it just clearly does not. Which I've been on the wrong side of a couple of times, quite a few times. So it is a little bit in backtest mode. So this is why this is crucial for this area to hold. On a bigger structure, if this area can hold, then you're targeting the highs here for high resistance. Comes back, finds support. Where's it find support? Previous resistance. This leg is what you want to see. You want to see, is this going to make the higher high? Continuation, resets the thing. Then you look for it to reset. Find some resistance, support, supported previous resistance, and on it goes. Or does it fail and sort of come back down here? And then this is why I think on a smaller scale, but leads to a bigger scale, this is quite an important level for them to hold. If they don't hold 6440, you're going to target that wick, 6412. If that doesn't hold, the whole structure becomes a failed breakout. And then really you're targeting, all these lows down through here, sort of, mid 63s. So I think this is why I think sort of on a small, this on 1 hour, albeit sort of a small move here, this is very crucial for the larger structure for it to hold. But as I said, I think US dollar is going to break out, and I think they're going to start buying that up. And I think that's going to put pressure on Aussie to come back down into this area here. So we could be looking at a bigger move. Look, if this thing gets right back down into it, and this becomes a big, massive area, and with a big fake out up here, that could get very, very big coming back down over here. This is definitely an area where they could be sort of targeting. Quick little look at these sort of things. We see US dollar, that had been selling off, so it had been pushing it up. China had been really sort of, I'll get to the one, but it broke its 5-month range to the bottom side. Little negative divergence. Plus, everybody was away, so you can't call those real conditions. But it was the one was strengthening, so that pushes it up. But the RBA, remember, is still looking to potentially sort of cut rates. That seems to be the big call with it all. So that is a handbrake on the Aussie. You need 3 ticks really to see Aussie fully boom. It can do it with the 2, particularly if the US dollar is being sold off. But if you want the massive breaks, and this is the thing, you didn't see mass levels of explosion at the top over here because you don't have the 3 ticks. This is a very crude way of doing it, but it's a very rough, raw way of looking at how it's going to come. So now we sort of update it and we say, look, if US dollar breaks out, all of a sudden you've got this. We've got the China come back on board. They sort of buy the wine, put it back into the range for a failed breakdown. Plus you got RVA. I would say this has potentially it's setting up for a fake breakout. This is the level that I'm looking for. Testing back into range. Underneath 64.36. Yeah, couple underneath these wicks here. Cool. All right, silver. Silver's actually sort of held on pretty well. Like, we got that sort of smash down. I had the two targets. I had 85 and 35. 85 got clipped. That's great. And it's actually been quite resilient, as you can see. It's trying to really sort of almost do a bit of a swing from the lows down over here. I still think it's probably destined to sort of hang around these levels. Again, I'm not, even though this could be some sort of little bit of a thing, I'm going to get rid of that because I'm not a big fan of it. Let's clean up the chart a little bit. Look, really test out the bottom of this little support area, unable to continue. Again, same with gold. You saw the buys, they moved up from 31.70 to basically call 32, and you're seeing the pressure being put on this level up over the top over here. Let's update this just a little bit here. You got a lot of bits of resistance to get above. I would say above 32.85, you might see a little bit of a continuation. Till then, I'm not really interested in silver, to be honest. It's just very choppy. Very, very choppy around this area. Maybe a good medium term buy, but I'd like to get it down here. If I could buy silver down 31s maybe. But for me, it's not really a trade at the moment. Copper. So it started to pull away from this little channel. Little air quotation marks flag. This thing is just grinding and grinding and grinding. This is why, there's always that sort of thought, why don't you just hold these positions? I mean, I had shorts from, I don't know, somewhere up around over here, got out down around over here, and then it's just grinded the whole way through here. So it has started to move down a little bit. It did put in a fairly decent little sell-off yesterday, about 1,000 points or something, I think it's dropped. Oops, this one here. Yeah, 890 points that dropped. So a fairly decent little sell-off in a quick succession because that's two candles just there. So in 2 hours, 1,000 points down. But again, buyers are still moving in. It's got a nice little horizontal support, as you can see. Whoops. It goes all the way back through this kind of area here. So that's a little zone for you there. We've got the alert set up. Take out our wick. And again, smaller structure. And this is the thing. This is why all the stuff's available on every single structure. Down you find support. Up find resistance. Now we've got to see, is this going to take it out and break down like this? And that's on the smaller time frame. Bigger time frame, we found support, find resistance. This is the leg that we need to see. So this little structure here will lead to internally showing this bigger structure. And this is the big one where we're going to see, is this going to take out the lows? Is it going to have a higher low? Whichever, whatever. But despite this thing continuing to grind back up, this move is what we do believe sort of should come at some stage. It's broken the channel, closed outside, retested the breakdown level. Now I just want to see that lower to confirm, and that'll be the alert underneath 467, 468, 468 underneath there. We should see a little bit of a move down like this. Quick little one with this one as well. Yesterday, sort of like a break of a channel. So if you look at this, like, yes, it's in a bounce in the context and yada yada, but this is its own little channel. A little early indicator of a break of a channel is a break of structure. So you can see low, high, touch to the tops, touch to the tops, touch to the bottom, touch to the tops, touch to the bottom. This kind of thing. It started to pull away from that. It should have, if this was to move up high, very reasonably could have sort of come back up and tested this 4.8. was that previous sort of support area, but couldn't quite even muster that. They would have come in nice little confluence with the top side of that channel, but sellers said nah, and they pushed in a little bit early, which is, again, puts the emphasis more on potential move to the downside. So underneath 468 is where we look for a move, and then potentially you're targeting back towards 4.5 for a breakdown towards 4.3, but it's all got to start with this little level. And finally, just with China, and this is what I was saying yesterday, we had this sort of, this is on the 1 hour, but as you can see, the buying pressure here very much sort of came up and held it, broke it, a couple of failed attempts here, but a rounded bottom sort of forming back up to sort of see if they can get this back up into the range. And this is what I was saying, so I think it was a little bit iffy with the price action yesterday because we had so many sort of bank holidays across the board. So, should this sort of continue, got the alert to say bang to get back up in the range, because the bigger picture of this is this 5 month range that it was in, tested out the top, back in. This could be the way that these ranges work. Sometimes you can get it test out the top, and then it counterbalances, and then just comes back up in the range and on with the grind. But certainly that sell down there, I was saying this is at the time I was like, look, it was very controlled till it wasn't. When they went on holiday, and they just bang, it got absolutely hammered at the bottom side there. So look, RSI on the 4 hour looks like it's ready to support a move back in. Really just got to see, is this move real? Is this going to come back up in here? Is this going to come back up in here, retest, and then move down like this? Obviously underneath those lows is a confirmation there. Or is it just going to be move back up into here like this? I'm probably leading more to this one, that it comes back into the range with USD strength across the board. All right, that's pretty much it from me.